Hey, fellow investors and fellow stock guardians. It's Friday, March 19th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a mixed stock market. I looked into the stock market indices movements, discussed why Facebook can still be a good stock to buy, and dug into a possible reason you could snatch shares of Visa at a better price. The market indices clawed their way back up from yesterday's drop, but not enough to finish in the green except for the Nasdaq index. Even Nasdaq finished Friday just slightly above the zero line. Representatives from the US and China met, but things weren't off to a good start. Apparently, both parties aren't too happy to meet, and a 4-minute photo shoot turned into an hour-and-a-half frothy back and forth between the two sides. Two countries fighting for a spot as the world's premier power, and the stakes are quite high. Somehow it reminds me of a scene from the upcoming movie Godzilla vs. King Kong. For the winner stock of the day, let's talk Facebook. Shares were up more than 4%. The company announced it is working on a children's version of its Instagram platform. This news is quite interesting because the kids market seems to be the next big frontier for technology companies. Just a few days ago, a video game making platform for kids called Roblox became public through direct listing, so this is a market to have our eye on. The news brought my attention to the company's stock card. At about $300 per share, Facebook's stock is not too overvalued. Its earnings per share is about 27 at only 1.3 times its comparable sector. What's exciting about Facebook is the work it is doing with Shopify and other e-commerce platforms to make Facebook a destination for e-commerce. The company is slowly and gradually creating one of the largest e-commerce platforms in the world. According to King Zuck, Facebook has 250 million active shops in less than a year. I'm considering Facebook for my nephews and nieces' custodian portfolio. Those two have about 2 decades before accessing their accounts, so by then Facebook would have enough time to fully roll out its e-commerce ambitions. Also, I'd keep an eye on Facebook as a part of my crash watch list. In case the stock market crashes, I'd definitely snatch up some Facebook shares. From the digital payment list of stocks on StockCard, 2 companies grabbed my attention. Visa was down more than 6% and MasterCard fell more than 2%. These are the kinds of stocks that rarely drop. It seems the Department of Justice opened a probe into Visa's debit card routing practice. The disclosure is only a few sentences and doesn't say much about what the probe is about. Assuming there is no malpractice, have an eye on this stock. These are the type of short-term opportunities that would give you a chance to harvest a good return on a well-managed company that rarely drops. On further research online, the probe seems to be about the technology Visa uses for routing online transactions, through which it makes it harder for merchants to use other networks beyond Visa. The investigation seems to be going back as far as 2012. I'm adding Visa to my watch list to investigate further on Monday and use this opportunity to buy some Visa shares for my windmill portfolio. I'll keep you posted. As always, if you'd like to give a stock card a try, research as many stocks that you want, and receive stock pick ideas from successful investors, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. Have a great weekend, stock guardians.